day, you're watching Business World Live. I'm Dani Laurel.
And I'm Jess De Los Santos. Here are today's top stories. The Asian Development Bank upgrades its growth forecast for the Philippines and expects the country to be the second fastest growing economy in Southeast Asia this year. But the lender trims its domestic GDP outlook for 2023.
President Bongbong Marcos assures European maritime officials and stakeholders that his administration is already making efforts to address the supposed lack of training of Filipino seafarers that has been flagged by a European agency. The president also bags an investment deal with more than 4 billion pesos in Belgium.
As lawmakers target to pass the Maharlika Investment Fund on second reading before Congress goes on a Christmas break, Budget Secretary Amena Pangandaman says it's high time for the Philippines to establish a sovereign wealth fund.
Let's begin our broadcast with the Asian Development Bank upgrading its growth forecast for the Philippines this year, but trimming the projection for 2023. The Manila-based lender now expects the domestic economy to grow by 7.4% this year. That's higher than its initial forecast of 6.5%. The latest outlook falls at the upper end of the government's 6.5 to 7.5% full-year target. Now at 7.4%, the Philippines is expected to be the second fastest growing Southeast Asian economy this year, just next to Vietnam. However, for 2023, the ADB lowered its GDP projection for the Philippines to 6% for 2023. That's from 6.3% previously. This is at the low end of the government's 6 to 7% target for next year. The multilateral lender says that while the economy has shown strong growth momentum and resilience in 2022, persisting inflation, further increases in interest rates, and a looming global economic slowdown are downside risks to domestic growth in 2023.
Here's another forecast, at least for 2023. Sun Life Investment Management and Trust Corp sees the country's economy continuing its growth trajectory next year, but at a moderate pace. Sun Life Investment Management President and Chief Investment Officer Michael Enriquez says the economy may grow by 5.35% next year. Enriquez explains the economy is bound to face headwinds due to global recessionary fears. Still, Enriquez said continued growth in consumption and capital outlay is expected, even though global slowdown is seen to dampen business and consumer sentiment. Now, to talk to us more about how they see things shaping up next year, both on the economic front and the equity space, we have again Michael Enriquez, President and CIO of Sun Life Investment Management and Trust Corp. Mike, good day. Thank you for joining us.
Good morning.
All right. So first things first, how do you see us ending the year at the same time? You are projecting a slower growth by next year. Is this just due to high base, or are there other factors at play here?
Well, for this year, we expect a strong GDP growth. We're expecting about 7.6% for this year. However, as I mentioned, for next year, it would probably be more moderate, but still growing. We're looking at about 5.35% on the midpoint, from a range of 4.6 to about 7%. So it's a wide range, but we're looking at a midpoint of about 5.35 in terms of growth for next year. And I think this is really still mainly driven by consumption spending, although probably we see more effects of the higher inflation tapering consumption.
Okay, Mike, I'll push that a bit, no? Why is it that this year we've seen the highest inflation in 14 years, and yet the consumption and the even your growth forecast is way above, or at least what was expected earlier on? The third quarter GDP figures also surprised most. So why aren't you seeing this happen for next year? Why is the consumption story suddenly different for next year, especially if we're hoping that many issues like COVID-induced slowdown, commodity prices are supposedly going to wane?
Yeah, that's a good point, Danny. And we were quite surprised as well when the third quarter GDP figure came out. We were all expecting a tamer growth, especially on household consumption. But Apparently, it was quite resilient in spite of higher prices. I think there are other factors are affecting this, mostly coming from continued pent-up demand from the reopening story. I think we're still realizing the reopening story, the revenge spending, as you may see it. A lot of people right now are really going out, spending, traveling,
Mm-hmm.
domestic travel, even going to the malls. You've seen car sales as well hitting growth numbers that are, I think, closer to pre-pandemic already. So I think a lot of these confluence of factors are affecting the spending patterns of consumers, in spite of the fact that we all are conscious about higher prices. We talk about it every day, but I think we still want to spend from like 2 years of lockdown.
So next year, wala na yun.
Wala na.
Ganun ba yun,
Next
sir?
Go to
year
paper.
probably would see it weighing down a bit. I think the biggest factor to that would be the high base effects.
Mm-hmm.
Okay.
Since we're growing so much this year, I think we just want to be realistic. We've spent so much, and then next year, okay, prices seem to be quite expensive. So probably taper a bit.
Okay,
Offshore.
sir, what about the offshore issues here, no? So the Fed just raised rates by half a percentage point, which is lower than the previous 75 bips, no? But also signaled that next year there will be steeper than expected rate hikes. What does this even mean? Because we were expecting a recession, and as such, the Fed was supposed to be more dovish. And then now, inflation over there still seems demand-driven. So what does this mean for the global economy, and how does this impact us? Is there really going to be a global recession happening by next year?
I think the Fed's priority is really to curtail inflation in the U.S. I think unlike here in the Philippines, inflation in the U.S. really driven by demand.
Mm-hmm.
Unlike here, it's supply. So it's cost of oil, cost of the food and commodity. But in the US, it's a different story. It's really demand driven. So the Fed is really keen on hiking policy rates to ensure that inflation can be tamed significantly lower to their target closer to 2%.
Mm-hmm.
And that is way far from what they're registering currently. So, up to the point that they can slip into a recession. So, maybe what we're looking at, the U.S. may slip into recession sometime towards the end of 2023. But I think it should not really be worrisome for investors, given that we only look at GDP in recession in terms of probably a slowdown in 2 quarters. But I think after that, once the Fed achieves the target, we may see Fed start pausing and then eventually cutting rates. So what does it mean for the country? I think for the Philippines, we don't see that same scenario for our economy. I think the factors that are affecting the U.S. is a lot different from the factors that we're experiencing here in the country. That's why even the BSP is quite conscious of the fact that, yes, they need to raise rates to defend the peso, but they're playing a balancing act of trying to moderate the pace in order for the economy to continue to grow.
Okay, given that as well, you said there's a difference, especially, of course, when it comes to inflation. Does that mean as well that price pressures will decelerate faster here compared to the US by next year? And when do you see that happening? And what could possibly be headwinds here that could interrupt that as well?
Di pa ba nagpipeak, sir? Hasn't it peaked yet, inflation?
Okay, for the Philippines, I think we're about to reach the peak. I think that's why after the 8% November inflation figure, you'd see the stock market reacting positively. I think we're about to reach the peak. In terms of that, our house viewers, our economist is looking at about January, February to see the peak and then slowing down. That's why even the BSP is already making pronouncement that they may start to increase rates at a more moderate pace.
What level is that
Not
peak?
really
By January or Feb?
We're looking at on average for next year, we're looking at a 4.5% average inflation for next year compared to this year. I think the average looking towards more of about 5.5%. So with that, I think we can start seeing inflation going down below 8% starting December, and then or probably closer to 8 December than January starting to taper. We still have to factor in the delayed effects of the typhoons that we've experienced over the last months. We've experienced it, some of it in this November. We probably experience more delayed effects come December and January.
Now, earlier you said as well, tamer response here for the BSP compared to the Fed. Do you see a possible unwinding happening next year?
Well, probably we don't expect the BSP to start cutting immediately. I think they have to take their cue from the Fed. So they may stabilize short-term rates, but I think cutting will probably not be next year.
Okay, sir, let's move to the equity space. So my key question here is, no, you're looking at a 19.2% upside for 2023. Why is that disconnected from the lower GDP or growth that you expect when you're expecting earnings to come up pretty strong?
Yeah, well, there's that GDP is not really fully reflective of the earnings of each of the listed companies. I think right now what we've been seeing is that the driver for earnings growth on the listed names that comprise the PSE would be from banks and consumer. And even if the consumer sector is growing, and the number one reason for us to be more bullish on the consumer sector is really input costs to be lower. So bottom line would be much bigger for these companies. Banks, for obvious reasons, that the margins have continuously been increasing. So those two sectors will definitely drive the growth on the PSEI. The offsetting sector would probably be the property, especially the ones more concentrated on office. Because the other thing that we need to also be conscious about is there's still a lot of office workers, especially the BPOs, who's still working from home. And a lot of the businesses that support the BPO, like restaurants and the other convenience stores, might not experience that same growth that they've experienced over the last years prior to the pandemic.
Okay, Mike, does this projection already incorporate the reopening or possible reopening of China?
Yes, because we need to also be wary of the reopening story of China.
Okay.
Yes, we've been hearing that the COVID restrictions have been easing, but the consequence of that is we've seen in the news that there's a spike in infections. That's why I think last night in Beijing, there's really no one out because everyone's afraid now to get infected. But in spite of the fact that the COVID-19 restrictions have been eased. So I think that's the danger of what the economists are fearing about China. Yes, they can lower the restrictions, but the COVID infections might increase, which is currently happening.
And just another question now on the index. How cheap are we right now? Is it time to enter? When you compare, if you're a foreign fund, especially trying to re-enter now that the peso is, maybe more expensive for them as well, is this the time for them to be buying compared to our ASEAN peers? Are we still undervalued?
Well, in terms of PE, I think we're trading below the 15 times average PE, especially for our target of 7, 8, 15 next year with an earnings or EPS growth of about 17.5%. That's just in our own computation, just 15 times price to earnings. And I think for a foreign investor, the thing that they would probably look at would be a more stable currency. Because we've seen that the start of or the heightened redemptions from foreign funds happened when the peso started to be more volatile.
Now, given that as well, what's your outlook here in the peso, especially now that we're considering, I mean, the Fed, of course, signaling higher rates by next year as well. So how do you see the currency performing in 2023 and how might that impact the equity space?
Okay, for 2023, I think we might see the peso depreciate again to a range of 57 to 58. Well, this is really mainly driven by the strength of the dollar with the continued Fed tightening.
Hikes, okay.
However, we don't expect the peso to depreciate significantly compared to how we saw it this year. So I think a more stable currency, even if it's slightly weaker from where it is currently, would probably attract more foreign investments because it's more stable. I think it's really more the stability of the currency rather than the appreciation.
Okay, very interesting points there. But like you mentioned, peso trading at 55.775. We haven't seen these levels in quite some time. Thank you so much for your insights, and of course, hoping that that equity outlook that you have will come to fruition.
Yeah.
19%
Hopefully.
upside for some of our investors here. Thank you so much, Mike Enriquez, President and CIO of Sun Life Investment Management and Trust Corporation. Thank you, sir.
Thank you.
Now let's pause for a quick break, but coming right up after that. The Budget Department says it's high time for the country to create its own sovereign wealth fund.
More of that and other stories when Business World Live returns. Stay with us.
You're still watching Business World Live here in One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
President Bongbong Marcos called for stronger ties between Southeast Asian and European countries as the ASEAN-EU summit comes to a close. During the summit's conclusion in Brussels, the president spoke about the European Union's contributions in addressing maritime disputes in the South China Sea. He noted that the summit allowed nations to map out possible actions against violations of the UNCLOS, or the United Nations Convention on the Law of the Sea.
The EU's commitment to even the doctrine of the DOC, the doctrine of behaviors in the South China Sea, is already a very big step for us in the Philippines, for example, and for all the countries around the South China Sea. That we now have the support, a strategic support from not only the member countries of EU, but of EU itself.
During his stay in Belgium, the president was able to hold several bilateral meetings with fellow leaders, including Belgium's King Philippe and European Council President Charles Michel. And during his meeting with European maritime officials and stakeholders, Marcos said the Philippines is already making efforts to address the supposed lack of training of Filipino seafarers flagged by the European Maritime Safety Agency, or EMSA. In line with this, the president ordered the creation of an advisory council for concerns of Filipino seafarers. Meanwhile, Marcos also said that he hopes to see the proposed free trade agreement to move beyond negotiations. Marcos earlier met with business leaders and secured billions worth of investment pledges, including some 4.7 billion pesos from Unilever. The president is set to return home to the Philippines later tonight.
As we move forward towards post-pandemic recovery, we eagerly anticipate the resumption of negotiations for the establishment of an ASEAN-EU free trade agreement. I am pleased that today's summit imbued all of us with a sense of renewed commitment to continue nurturing and expanding our unique ASEAN-EU partnership.
Meanwhile, Budget Secretary Amena Pangandaman says it is high time that the Philippines establish its own sovereign wealth fund. According to Pangandaman, the Bangko Sentral has been considering a sovereign wealth fund since the Duterte administration. The budget chief adds that there have long been studies about whether the Philippines is fit for a sovereign wealth fund. Pangandaman says that even experts believe that the country is ready to establish its own fund.
Any measure, program, law that will help our budget po, given our limited space right now, it's a welcome news po for me. Sabi nga natin, even though it's high time to have one. So, for me po, it's just follow the process, whatever po may result, kung ipasa po ng Kongreso, mapirmahan, we'll just implement it properly.
Proponents of the Maharlika Investment Fund are hopeful they can have the measure passed on crucial second reading before Christmas break. Now, during the plenary debates, however, Albay Representative Edsel Lagman maintained that it is not the right time to establish a sovereign wealth fund. Lagman insisted that the country's economic conditions are not ideal and far different from the first time a similar bill had been filed in Congress.
To make a long story short, at the time this Aquino bill was filed, we had a better economic environment.
Unfortunately, our growth rate today is higher.
It's not only the growth rate, but there are other economic parameters which we should consider. While the Philippines, may I reiterate, has no surplus in revenues, in fact, we have a deficit. We have a surfeit of negative economic determinators.
The proposed Maharlika Investment Fund should adhere to high standards of governance and transparency. That's according to an official of the International Monetary Fund. According to IMF representative to the Philippines, Ragnar Gudmundsson, the proposed bill must be consistent with these principles in order to safeguard the country's wealth. Gudmundsson says that the government should set up reporting requirements to strengthen accountability and oversight. He adds that the Maharlika Fund should also have a clear separation of responsibilities and authority. Meanwhile, BSP Governor Felipe Medalla assures that contributing to the Maharlika Investment Fund will not affect the Bangko Central's mandate. This, as the revised version of the bill requires the BSP to contribute all annual dividends into the Wealth Fund for the first 2 years. According to Medalla, this should not affect the BSP's ability to rein in inflation.
All mobile phone users in the country will have to register their SIM card starting December 27th as the SIM card registration law takes effect.
Now, the government warns that non-registered SIM cards will be deactivated. Camille Samonte with the details.
Over 150 million mobile subscribers will soon be mandated to register their SIM card with their respective telecom operators. The SIM Card Registration Act will take effect on December 27. New SIM cards bought after this date will be in the activated mode, and users can only have them activated once they register. Subscribers, both old and new, must register their SIM cards within 180 days from the law's effective date. But the DICT says they may extend the registration period for another 120 days. Failure to register during the period will result in the activation of their SIM cards. The registration shall be accomplished electronically through a platform or website that the public telecommunications entities will establish. Government agencies and PTEs will also put up registration facilities in remote areas with limited data or internet access. For their part, the DICT and Telco said they are in the final stage of preparations for the SIM card registration. Speaking on Radyo 5, DICT Assistant Secretary Ana Mayo Lamentillo said telcos are already developing platforms to be used for SIM registration.
We're still doing some revisions, pero rest assured, sir, na yung platform po ay ginagawa na before pa, and that we will be ready for the December 27 registration process.
The SIM Card Registration Act was signed by President Bongbong Marcos in a bid to combat fraud and cybercrimes. NCT consultant Edgardo Cabarios meanwhile said that telcos will be ready to handle lost or stolen SIM cards.
Pagka nawala po o ninakaw, immediate po ang reporting yan, no? Yeah. Huwag na kayo magdalawang isip, i-report po kaagad kasi delikado po yan, no? Kung makunan iba at gamitin for illegal activities, kayo po ang number one suspect, kayo ang nasa registration, correct. Sa inyo nakapangalan.
The DICT added that the implementing rules and regulations will also provide proper penalties and fines for users of fake registration documents. The agency, as well as telco firms, are also preparing to use biometric and facial identification systems in registration and the possibility of using fingerprints as well. For News 5, Camille Samonte, we are One News.
Okay, when are you going to have your SIM registered? You have no choice in this
It's on the to-do list for the Christmas holidays.
But
Pinagdagan.
like we were talking about it off air, it's going to be a struggle, especially for remote areas. There really has to be a specific place. At the same time, there's a requirement for valid ID, and that also is going to be a big question.
Really?
Paano naman yung mga iba? Some of, let's face it, some of the Filipinos wala pa talagang valid ID.
Kahit national ID, wala pa.
Okay. That's it for today, December 15, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us in Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Stay safe, Philippines. We are One News, all sides, all the time.